Welcome to the Deep Dive.
Today, we're diving into the latest updates as of Monday, April 14th, 2025. We're looking across the whole geoeconomic landscape.
Right, that's the sort of interplay between geography, economics, trade, investment, all that stuff. I'm going to kick us off with some of the big numbers, the stats shaping the global markets right now.
Okay.
So let's get right to it. First up, the U.S.-China trade situation, still very much ongoing. You might recall last week saw that pretty dramatic move the Trump administration slapped 145% tariffs on a lot of Chinese goods.
Yeah, that was big news. But things have shifted a bit since then, haven't they?
They have. It seems like they're trying to walk a tightrope here, projecting toughness, but also trying not to completely derail the economy.
Right, balancing act.
Exactly. So almost immediately after those tariffs were announced, we saw exemptions pop up.
Yeah.
Smartphones, laptops, other consumer electronics suddenly off the hook.
And the thinking behind that.
Well, it looks like a move to calm the financial markets. They were definitely getting jittery.
Yeah.
You had big tech names, Apple, Microsoft, NVIDIA, their shares dipped. Apple reportedly lost something like a staggering $700 billion in market cap.
Yeah. Yeah.
So this exemption acted as a kind of release valve, took some pressure off.
It really highlights that tension, doesn't it, between the political goals and the reality of these global supply chains we rely on.
Absolutely. And companies like Apple, well, they still depend heavily on China for making iPhones, right? So this was definitely welcome news for them, even though they're trying to diversify, like with that growing plant in India. I think it's doing, what, 35 million iPhones a year now?
Still a fraction of the total, though.
True. But don't get too comfortable thinking this is like a permanent fix. This relief might just be temporary. Commerce Secretary Letnick was on TV recently warning that those same electronics, they're still under scrutiny, part of an upcoming probe into semiconductors.
Ah, okay. So the other shoe might still drop.
Pretty much. He suggested new semiconductor tariffs could be just maybe a month or two away. He said on ABC's This Week something like, these goods are exempt from reciprocal tariffs for now.
Right, the tit-for-tat ones.
Yeah. But he added, they're included in the semiconductor tariffs which are coming. And when they asked him straight up if iPhones could face tariffs again, he said, correct. That's right.
So the uncertainty just continues. That makes planning incredibly difficult for businesses, doesn't it?
You're spot on. Consistency, predictability.
Yeah.
That's what businesses need for long-term decisions. And this is, well, not that.
And it's not just semiconductors in the crosshairs.
No. Remember, President Trump had already put those 20% tariffs on Chinese imports linked to fentanyl. And he's hinted there could be more levies if China doesn't negotiate.
And China's reaction?
Unsurprisingly, they haven't just sat back. They retaliated, raised their tariffs on U.S. goods to 125%. And they basically said they'll fight to the end, calling the U.S. actions unjustified protectionism.
So classic tit-for-tat escalation.
Exactly. Now, Beijing did acknowledge the tech exemptions, called them a small step, but they're pushing for a complete removal of all tariffs. Their Ministry of Commerce had that line, there are no winners in a trade war.
A line we've heard before.
Indeed. Now, the White House says their goal here is to shift tech manufacturing away from China. Look it back to the U.S. or maybe other friendly countries.
But how realistic is that, really, especially for something like iPhones?
Well, there's a lot of skepticism. The sheer scale of production, the infrastructure that's been built up over years in China, the skilled labor. Think about Apple's iPhone City in Zhengzhou, hundreds of thousands of workers. Replicating that stateside, that's a huge challenge.
Right. Even with the diversification into places like India, it's a massive undertaking.
It is. And this push, this potential shift, it brings up the question of cost for consumers, doesn't it?
Absolutely. If it costs more to make things elsewhere, those costs usually get passed on.
And economists are worried. John Williams at the New York Fed suggested tariffs could push inflation up towards 4%. Ray Dalio, the investor, went even further, warned the U.S. could face something worse than a recession if this isn't handled carefully.
Serious warnings.
Yeah. And it's important for you, the listener, to keep in mind. Despite all the talk about phones and laptops being exempt for now, most product categories where the U.S. really relies on China, they still face those big tariffs.
Like what sort of things?
Think everyday items, electric fans, toys, microwaves, gaming consoles. 46 out of the top 50 most China-dependent categories are still hit. Mattel, the toy company, has already said they'll probably have to raise prices. Other companies might just stop importing some things altogether.
So less choice, higher prices. That's the potential impact.
That's the worry. And moving production isn't easy. Southeast Asia is building capacity, sure, but replicating those really complex supply chains, that pool of skilled labor China has, that takes time. It's not an overnight switch.
So a lot of turbulence for companies and potentially for consumers too.
Definitely. As Chad Bown over at the Peterson Institute put it, it's unclear if these exemptions are just temporary or something more permanent. The uncertainty is the key theme.
And the financial markets are reflecting that uncertainty.
They are. Goldman Sachs actually lowered their targets for Chinese stock indices again, second time this month. They're pointing directly at this intensifying U.S.-China trade friction.
Saying it's reached unprecedented levels.
That's the phrase they used.
Yeah.
And they're warning about decoupling risks. Economies pulling apart across capital markets, tech, geopolitics. It's a big shift from just a little while ago when there was optimism, particularly around AI boosting Chinese stocks. The MSCI China target is down, over 8% since then?
So that trade war is really casting a long shadow.
It absolutely is.
Okay,
so that's a look at the broader picture in the U.S. side. Let's switch gears now. What's the latest data telling us from inside China?
Thanks. Yeah, looking at China, it's a bit of a mixed picture right now, some strong signals, but also some underlying weaknesses persist. Let's start with R&D, research and development. In 2024, China poured a huge amount into R&D. We're talking 3.61 trillion yen. That's roughly $500 billion US.
Wow.
Yeah, it's an 8.3% increase from the year before. But what's really striking for you to consider is the longer trend. Since 2018, their R&D spending is up 84%. That's nearly double the rate their GDP grew over the same time.
So a massive strategic push on innovation.
Clearly, it underscores how important tech advancement is becoming for them. They're now the world's second biggest R&D spender behind the U.S.
How does that compare to others?
Well, back in 2022, their spending was already more than 3 times what Japan and Germany spent, and their R&D intensity, that's R&D spending, as a percentage of GDP, hit 2.68% in 2024.
Which puts them where relative to other advanced economies?
It's getting up there, sort of on par with many G7 countries, still a bit below the U.S., though, which was around 3.59% in 2022.
Okay, so big numbers, rising intensity. But the report you mentioned also flags some areas where they're still lagging.
Exactly. It's not all rosy. While the total spend is impressive, per capita R&D spending in China in 2022 was $128,000. That's significantly lower than the U.S. and actually lower than even Italy, which is the lowest in the G7 on that measure.
Interesting. What else?
Another key point is where that R&D money is going. Only about 18% of it goes towards basic and applied research, the really fundamental stuff.
Right, the foundational science.
Yeah. Compare that to the U.S. and Japan, where it's roughly a third. And France and Italy, they dedicate something like 60% to basic and applied, according to OECD data. One of the report's authors, Sunnat, specifically warned that focusing too much on just experimental development could actually hinder those big, long-term scientific breakthroughs.
That makes sense. You need that groundwork for future leaps.
Precisely. The report also pointed out a geographic imbalance. Southern China accounted for, 67%, 2/3 of all R&D spending in 2023. Guangdong, Shanghai, Jiangsu are leading the pack. Only Beijing and Shandong in the north made the top 10.
So innovation investment is quite concentrated regionally. Who's funding all this R&D growth? Is it mostly the government?
Actually, no. That's another significant shift. The private sector is now the main driver. Enterprise-funded R&D shot up from just 30 billion yen back in '95 to 2.4 trillion yen by 2022. That's 79%, almost 4/5 of the total R&D investment.
Really? So corporations are leading the charge?
Hugely. Just look at Huawei. Their R&D spending alone in 2022 was more than half of the top 10 listed Chinese firms combined. Government contributions are down to about 18% of the total, with local governments actually kicking in more than the central government.
That's a really important dynamic to understand, the private sector taking the lead on innovation there. Okay, let's talk trade from their side. We know about the U.S. tariffs. What do China's own export and import numbers look like?
Well, the latest data for March showed a surprisingly strong surge in exports. Measured in U.S. dollars, they jumped 12.4% compared to last year.
12.4%, that's much higher than forecast, right?
Way higher. Economists were expecting something between 4.6% and 6%. And it's a big jump from the first 2 months of the year, which saw only a 2.3% rise. This strong export performance pushed their trade surplus up to a hefty $102.6 billion US.
Okay, so on the surface, that looks like good news for the Chinese economy.
It does. But, and this is the crucial flip side for you to grasp, imports actually fell. They dropped 4.3%. That's a steeper decline than the 2.1% fall that was predicted.
And that signals.
It signals continued weakness in domestic demand inside China. So while they're selling a lot overseas, their own internal market still seems sluggish. It's not quite picking up the slack from potential external pressures.
Right, so strong exports, weak imports. Why the big surge in exports in March then?
Well, the most likely explanation is what's called front-loading.
Oh, trying to beat the tariff hikes.
Exactly. Chinese exporters probably rushed to get goods shipped to the U.S. before those anticipated American tariff increases kicked in April. We actually saw exports to the U.S. jump 8.8% in March after falling 11% in February. That fits the front-loading theory quite well.
Makes sense. But it also means that boost might not last.
Probably not. Given that the trade tensions haven't really eased up, most analysts expect this export momentum will likely fade as we move through the second quarter. It was probably a temporary bump.
Okay, so potentially a short-lived surge driven by tariff anticipation, while underlying domestic demand remains a concern. Thanks for that detailed look at the China data. Let's shift focus again now, maybe touch on some other global developments we're tracking, specifically from the Underground USA news source.
Right. What did they report for the past week?
Well, they described the week of April 6th to 12th as a bit of a swing and a mess from their research standpoint, meaning not a lot of conclusive new information came out.
Okay, sometimes it's like that. More noise than signal.
Exactly. They did reiterate the ongoing U.S.-China trade war situation, characterize it as having lots of ups and downs, but no major breakthroughs yet. Tariff levels remain, where we discussed 145% U.S. on China, 125% China on U.S., basically what they call a trade embargo.
Any hints of movement?
They mentioned there's an expectation of more news on negotiations this week, so that's something we'll definitely keep an eye on for you.
Okay. What else stood out?
Concerns about U.S. aviation safety seem to be persisting. Apparently, this has been a growing issue since the election, with talk of shakeups at the FAA and airports.
Any specific incidents?
Yeah, some unusual ones last week. A fistfight, believe it or not, between air traffic controllers in Washington, D.C. Also, 2 separate incidents where planes clipped wings on the ground, also in the D.C. area.
Wow, that doesn't sound good.
No. And adding to that, the chief of air traffic control doctrine and management apparently announced their retirement. The report notes that while the media often focuses on crashes, these kinds of staff issues and organizational shifts are also a real concern bubbling up in the aviation world, something that could, potentially affect travel down the line.
Worth watching. What about geopolitics? Ukraine, Middle East.
Ukraine's situation on the ground reportedly largely unchanged. But interestingly, they noted that direct U.S.-Russia negotiations seem to be getting more high-level, even publicly high-level. They suggest that could be a positive sign, potentially.
Cautious optimism, maybe?
And the Middle East, still seeing that strategic buildup. Questions remain about the ultimate target, Yemen, Iran, somewhere else. And U.S. bombing in Yemen continues pretty much daily.
Okay. And then there's Diego Garcia. That's been a focus.
Yes, Diego Garcia continues to be a key point of interest, mainly through satellite imagery analysis. As of April 6th, imagery confirms 6 B-2 stealth bombers and 6 refueling tankers were parked on the South Apron there.
Standard presence recently, right?
It has been. But then, imagery from April 8th, taken during daytime mid-morning local time, showed 3 of those B-2s and 3 tankers were missing.
Missing? Where might they have gone?
Well, that's the question. One theory was daytime bombing runs over Yemen. But the report points out the Houthis haven't reported any large-scale daytime bombings. Their reports usually mention major strikes happening at night. So the planes being gone during the day doesn't quite fit that theory perfectly.
Interesting discrepancy. What else did the April 8th imagery show?
It also showed 2 C-5 Galaxy transport planes, those huge military cargo jets on the runway. Their presence was confirmed using point minoration analysis.
Okay, so transports were coming and going too. Did the bombers come back?
Yes. April 9th was cloudy, but Sentinel-2 imagery from April 10th confirmed all 6 B-2s and all 6 tankers were back on the apron. Plus, one of the C-5s was still there. One B-2 even looked like it was maneuvering on the ground.
So they were gone for a couple of days, roughly. What about ships around the island?
Good question. The maritime analysis also turned up something interesting. They spotted 2 unidentified vessels nearby. One was quickly ID'd as a tanker, probably delivering fuel. Standard stuff.
Any other one?
The other one was trickier. Initially, based on its look, they thought it might be a Lewis and Clark-class dry goods ship. But something didn't quite add up. After digging deeper, they confirmed its actual identity. The USS Emery S. Land. That's AS-39.
The Emery S. Land. That's a submarine tender, isn't it?
Exactly, and that is significant. Having a submarine tender present strongly suggests U.S. Navy attack subs might be operating out of or being supported from Diego Garcia.
Which would be a notable capability increase in the region.
Absolutely. And what makes it even more noteworthy is that the Emery S. Land used to be based there, but had reportedly been transferred to Guam some time ago. So its reappearance is definitely something to flag.
Do they know when it returned?
It's hard to pinpoint exactly because of cloud cover in the satellite imagery, but the best estimate is sometime between March 11th and March 18th this year, 2025. So while it wasn't the kind of supply ship maybe initially suspected, finding a subtender there is arguably a more significant piece of intel about the military posture in the Indian Ocean.
Definitely adds another layer to the strategic picture. Anything else from that Underground USA update?
Just a couple of final notes. They mentioned some light GhostNet reports for the week that's intercepted communications, basically, and a final reminder about having backup communication plans, given the ongoing vulnerabilities of those undersea communication cables that carry so much of our global data.
Right. Always a relevant concern. So, pulling all this together from today's deep dive, we're seeing several really interconnected themes, aren't we?
Absolutely. You've got these escalating trade tensions, particularly U.S.-China, this high-stakes economic rivalry playing out. Then you have China making these significant economic adjustments, really doubling down on tech R&D, and layered on top of that, these notable military deployments and activities in key spots like Diego Garcia.
It's all intertwined, the economics, the geopolitics, the military positioning.
Definitely. So the thought to leave you, our listener, with today is this. Considering how interconnected global economics and geopolitics are, as highlighted in this update, what potential long-term scenarios could emerge from this friction? From the trade disputes, the tech race, these military movements, and how might those shifts ultimately reshape your understanding of global stability and maybe even future opportunities?
It's a complex picture for sure. Lots to think about. Thank you for joining us for this deep dive into these critical global developments. We really encourage you to keep thinking about these forces and how they shape our world and potentially your future.
Join us again for our next deep dive.